What is going on YouTube? It's Sank and we're back with another one. Now in this drop, coming at you guys with a couple of plays I'm going to bring to attention. Before I kick things off, I'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, so that wraps up another day in these markets. Now as I've been saying over the last couple of days, we are in for nothing but an action-packed few weeks in these markets. And if you've been in the market today, you know it brought the heat with all three major indices down. That's the S&P, the Nasdaq, the Dow. Now that's a rare sight given how well they've been performing over the last couple of weeks. So naturally, it means our plays are going to come down. As I say, our players are going to ride the tide in the short term, but that's not an opportunity to panic. It's a chance to pick them up at a cheaper price point. Now the markets are moving volatile today because those inflation numbers landed. That was giving you guys a heads up on, and as expected, they come in hotter than forecast. So the headline figure is inflation rockets to a 13-year high. Now the markets are expecting higher food prices, gas, commodity prices, but they were blindsided by one of the biggest causes of inflation over the month, and that's higher prices of used cars. Now, some of these effects are going to be short-term temporary, like that one, and some are going to have more sticking power. So, to let you guys know, this is a theme we're going to continue to encounter in the markets for the foreseeable. But the game plan remains the same. We're picking up quality plays at cheaper price points because when they make their rebound, we'll be sitting on great returns in these markets. Now, that being said, in this one, I've got a jam-packed one for you because I'm putting 4 stocks that will explode on your radar. So, let's get to the first one. So we're kicking things off here. That's ticker symbol DAC. That's Danaos. Now we're looking to take full advantage of the dip that we've seen in that stock price today, down about 5.5%. They're currently standing $69. Now if we check out the charts, this one is now trending near their support, so good entry can be made at these levels. Now let me remind you guys, anytime inflation comes into the picture, it always rocks these shipping plays. So if we look through that rear view mirror, in May, this one was sitting about $65, saw them drop down to $55 off the back of inflation concerns. Shortly after, we saw this one rocket up to their 52-week highs, which was $79. Okay, so it's an opportunity to get in on a healthy pullback on this play. I want you to know that inflation cannot stop the rise in this one because those shipping rates, 500% what they used to be last year, and they're locking in multi-year agreements. So when this one comes out with their earnings report, it's going to catch the market off guard. You can see a surge of demand in that stock price moving it up. I'm expecting this one to close out the year around that $100 mark, so great upside on that current stock price. Now the way we're going to hit success as we continue through the second half of the year is to ensure we're positioned in all the major themes, major winning themes for us investors, and one of them, as I say, is these sky high shipping rates. So if you haven't done so, make sure you make entry on this play. Let's get to the next one. Now talking of winning themes, next up, that's ticker symbol PRTS, that's carparts.com. Now at the beginning of this drop, I was saying one of the major causes for the jump we've seen in inflation over the last month has been the red hot used car market. So hopefully you guys can connect the dots between that piece of intel and a play that distributes car parts. Hitting success in these markets is sometimes just about putting yourself in the driving seat to understand the bigger picture of what's going on in these markets. Now currently standing $18.24, we've seen this one come down over 3% on the day, trending close to that buy zone that is sub $18. Now we made first entry on this play last week. If we see this one drop below 18 again this week, we'll make another entry. That's what it's all about, building your position over time in these plays to ensure you can get the best cost basis. Now I want you guys to know ticker symbol PRTS is one of our ancillary plays. So check this out. They have a market cap of $572 million. Anything under $1 billion is one of our ancillary plays. They're just there to provide a little bit of a boost to our portfolios. But what we really do is we build our portfolios around multi-billion-dollar companies. Okay, so check this. Plays like a Grow Generation, plays like an Apple, some of my biggest holdings in the portfolio, those are multi-billion-dollar plays. But along the journey, we're looking to hit it out the park with a couple of plays that just provide a bit of heat, pack a punch, like a ticker symbol PRTS. So about moving strategic in these markets and how you construct your portfolios. The next one I've got for that's ticker symbol HYRE, that's HyreCar. Now we've already hit major success with this one since we first picked them up at $7. I'm gonna let you know there's still room to climb in this play. Now let me remind you, this is a peer-to-peer car lending marketplace. And as I was saying, the used car market right now is red hot. And what it's done is it's priced a lot of people out. And you guys know, if you can't purchase, what's the next best thing? You rent. That's where HireCar comes into action. Now this player's already hit major success through the first half of the year. I want you guys to know those plays that have done well in the first half of 2021, a lot of them still have tailwinds to make them a success in the second half as well. That's exactly what's going to unfold with this one. That's why I'm going to bring them to your attention. But I want you to know this is a volatile play and we are looking for entry at $15. I'm expecting this one to drop to 15 before making a climb and closing out the year around that $25 mark. So put this play on your watch list. This is going to be a big winning play. The next one I've got for that's ticker symbol BGFV. That's Big 5 Sporting Goods, currently standing $23. What you guys need to know, this is going to be one of your more volatile plays. That's why I say you ease yourself into the play. You never go all in on your first trade. You buy with the aim to buy in weakness. That's how you get the best cost basis. Now, as I was saying to you guys in yesterday's drop, this is the type of play that isn't going to give you any business updates in between earnings. So after earnings, the market's going to forget about the play. That's what's going on right now. You're getting the profit takers. But I want to let you guys know that it's going to be a major theme. Consumers are going to spend a lot more on apparel, whether that's active wear, whether that's casual wear. All right, guys, so those are the plays I've got for this one and the moves we're going to be making with them. Now, as we continue through this week, it's still an action-packed one. We've got a ton of companies releasing their earnings. We're hearing from Powell. So if these things do shake up the market, I want you guys to keep a watchful eye out for our quality plays that dip into the buy zone. Anytime we hit a little bit of turbulence in these markets, I'd like to give you a lesson on volatility, because what you guys need to know is some of these plays are actually designed to move down 5-6% when the market gets a bit more turbulent. When the market's good, it's the reverse. Okay, they're designed to move up those types of levels. So check this out. Got ticker symbol IIPR, that's Innovative Industrial Properties. This is one of our channel REITs. You guys should all be in this play. And on a side note, I will be giving you guys some more REITs to make entry in so we can hit success with those plays as well. But look at this. Check out the beta. So your beta is going to be the level of volatility, your measure of volatility. Now, beta of 1 just means the play moves in line with the market. A beta of 2, for example, means the play moves twice the market. So if the market goes up 1%, the play is likely to go up 2%. Now, what I've actually found out is, from my experiences, if the play's got a beta of 2, it typically moves about 4 times the market in either direction. So IIPR's got a beta of 1.46. It's going to be a less volatile play. That's why you're seeing this one close up just about 0.16% on the day, when a ton of other growth plays out there in the market were down 5-6% on the day. Now, if we switch things over to ticker symbol BGFV, check this out. Beta 2.9. Okay, so it shows you this is a more volatile play. So if the market moves down 1%, you should expect this play to move down minimum 3%. So as I say, some of these plays are actually designed to move more volatile. So when you guys see plays move down 5-6% in a day, it's not an opportunity for you guys to panic. You guys just gotta realize just the dynamics of the market and how these plays move. So if you've been rocking with the channel, you know what time it is. What's a decent initial investment in developing a starting position? So to wrap this one up, I'm gonna share this with you. Now I wanna let you know it doesn't matter what you're working with, whether you got $10 to put in the markets, whether you got thousands. What is important is that you guys are active in the markets, you're understanding the plays and market dynamics, and identifying trends and patterns that just repeat themselves. That is how you hit success. I want you to know $1 million portfolios can be made over time with average salaries due to the power of compounding returns in these markets. So don't let capital limit you. Just make sure whatever you have, you're investing appropriately, and as I say, moving in the right lanes, hitting success in these markets. Now over at the Discord, I've got guys working with thousands in their portfolios. I've got guys working with hundreds. That's just the way it should be. And I want you to know, over time, as your income grows, you should be investing more and more into the markets. It's a process. Now, just to throw out some numbers, if you're working with, say, with a $10,000 portfolio, I would typically make entry with about $250. That's going to allow me tons of dry powder to ease myself into that play and build diversified portfolios and look at other different plays in the markets and just do so over time. Alright guys, that wraps up for this one. If you've got any questions for me, drop them down below and I get back to you. So I appreciate you guys on your way out. Light up that comment section for me, and if you're new, join the movement, and I catch you on the next one.